All right. What is up? Good morning, everybody. Welcome to the official Trade Talk channel where I show you how. Sorry, hang on, let me sec. This thing isn't working. All right, there we go. All right, sorry about that. Good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries. So that way you guys can become better traders. How's everybody doing on this fantastic Thursday morning? We got quite a bit of stuff going on this morning. We just had ECB, and basically it came in as expected. They were expected to go up 2.5%. We got 2.5%. Deposit facility rate 2%. Retail sales was a miss. They were expecting negative 0.1%. We got 0.6, which is negative 0.6, and then the continuing jobless claims 1671 that came in as expected, and then the initial jobless claims 230K. 211 is what we actually got there. So we got the DXY taking a dump today, after being very, very strong after yesterday's FOMC meeting. You got FOMC, well, you had CPI this week, FOMC, ECB today. I mean, it's been a pretty crazy week. Volatile to say the least. We have assets doing things they should not be doing, and others, yeah. So let's talk about it. First and foremost, you've seen that the euro has basically made a bullish engulfing candle. The DXY is working on that to the downside. SPX pushing lower, Bitcoin pushing lower. So what gives, right? One of these assets is going to more than likely be lying. So we'll just have to watch it and see what's going on here. Bitcoin isn't into really any levels that I would suggest a trade at from here. You're literally in the middle of an old daily resistance level at $17,555. And you have last week's high coming in at 17,424, spot 59. So if we pull up the exponentials, you're going to see that you are currently well above the 21 on the daily time frame. So typically anytime we have a market structure like this, even though all the other moving averages are above price, it just says that the near term has had a little pop. With the dollar getting absolutely crushed like this, you would think that Bitcoin would catch a bid. However, CZ was just talking on CNBC. Come on. CZ was just live on CNBC, and they were asking him some pretty hard questions, and he was skating around a few issues. There was an article that came out this morning right here on Bloomberg. This article came out like literally 2 minutes after or before I posted it. This article came out today at 6, or sorry, the original article came out yesterday, but then it was updated and revised today at 6:58. I posted that on the Twitter account if you want to give it a read. It is a pretty important article. The 7-day average of open interest for Bitcoin perpetual futures has dropped 40% from the start of November as of Wednesday. 40%, that's a pretty big drop in futures trading. That's typically not what we want to see. The decline comes as investors pull cryptocurrencies from exchanges such as those ran by Binance, which operates the largest spot or cash exchange as well. Binance founder CZ said Wednesday that outflows have stabilized, while warning employees that the industry's recover from rival FTX's November collapse will be bumpy. So that's probably why Bitcoin is having very much a problem catching a bid when you have clearly a very weak dollar. So you seem you seem to be weaker than the dollar when you're traded against the dollar, and the dollar's going down, and so are you. So yeah, I don't know that we will even find a trade today, but we will look. We have the market open, the U.S. stock market opening in 10 minutes. We'll see if we can't get SPX or Bitcoin to get a bounce. So we'll see what happens. Old daily res, it looks like you're getting ready to come into that right now. So yeah, I mean, typically we look to buy pullbacks into support, but like I said, you're not really into a level of support. I guess an argument could be made that you do have an hourly level of demand right there. So if you wanted to be a buyer, I would definitely want to see a tag of 17,445 before I could take the trade. Simply because if it's not touched it yet, it might. So, I mean, I can't just get long right here and put my stop loss there because there is a chance for a small drawdown, at least down to tag that level. Doesn't have to touch it. There's nothing in this, in the trading rule book that says price has to do anything, but you never know, right? You never know. So let me get this out of my way. Sorry, I'm a little bit unorganized this morning. I don't even have a chat. There it is. There you are. Hello, chat. All right. So yeah, a couple people were asking me this morning if we were looking for shorts. No, yesterday was the short, right? Yesterday when I tried to take the short trade, but my broker wasn't logged in. Remember that amazing feat of traderism? Oh man, that was a huge mistake. But that would have been the trade to take. We did take a profitable long yesterday during the news. It did end up working out. I did tell you to take profits at 18K, right? Or just under it. That was right here on this candle, if you do not remember. So we did buy the low of day. We took profits at 18K. We moved the stop to break even. And then not even an hour later, it was like, 30 minutes, 35 minutes goes by, and then we ended up getting stopped out. That's why you take profits, especially if you're taking a trade that is obviously counter trend for the day, counter trend for anything, really. Counter trend. So today we're red. It's hard to buy a red day, but that's exactly what you got to do if you're a buyer. Usually, you don't want to buy on a green day because there's always a chance for a pullback. But with the dollar getting crushed like this, I dare say that I would think that risk assets would bounce. So let's see if we can find some support or something. We got support down here, but once again, you're in the middle here. You got an old demand level there, but I mean, is it really demand after it's already been traded through several times? I guess it could be, but we like to use fresh levels, and there's just not one here. If you look at it, I mean, not a pattern trader, but you do have some kind of funky head and shoulders pattern going on there. You have broken down from the trend as well. Let's go over here and show you what I mean by that. If you take a trend line from this swing here up to there, you've broken down, but that's not really the one we were looking at. We were watching this one, the original one. You broke down last week. You were able to trade above it briefly on the CPI print, but you are back under it and you are seeing downside continuation. But pullbacks are typically where you want to be a buyer if an asset is showing you that it has the ability to be bullish. We do have the ability to be bullish, but that is one ugly ass weekly candle. Very, very ugly. Weekly open or the support, we already have that marked at 39.28. So that's where we would want to see price get to for entries. Would I take a bullish entry with that weekly looking like that? Probably not. I mean, I've been doing this a while, and that is one ugly candle. It definitely looks like we're going to see more of a pullback here based on all the news that we've gotten. Yesterday's meeting, Mr. Powell was both hawkish and dovish. He said a lot of things that could be construed as dovish, but ultimately, I guess the market is latching on to the hawkish stuff that he said. I didn't catch Christine Lagarde's speech because I was listening to CZ on CNBC, and like I said, he was dodging a few questions like, why don't you just be transparent? Why not just have auditors come into your building and look at your books and tell the world that you are financially stable, that you are liquid as a company? And he just literally dodged the question by saying stuff like, well, it's hard to get auditors. And then they were like, well, Coinbase has auditors. And then he was like, well, Coinbase is a small company. And then they were like, yeah, but they still get auditors. I mean, like, just totally dodging the question. So that could be why we're seeing Bitcoin weak. But Bitcoin was already pushing down before he even spoke. So I think, just like as the S&P 500 was, I don't think CZ can do anything with that. But we'll see if support holds or if it finds some support here at the open. If it does, then we can look to be a buyer at support. Current intraday support would be this candle until you get a candle close under it. So if this candle closes under this candle, then this candle will be the candle that we monitor moving forward. It's a very ugly candle, ugly weekly candle. So I don't know if I even want to be a buyer. Man, that's ugly. A lot of uncertainty out there. You got Wall Street is mixed. Half of the funds managers and stuff that speak to Bloomberg and CNBC, Fox Business, half of them are bullish and half of them are bearish. I mean, that's what makes a free market, that's for sure. But I can't remember a time when there was this much uncertainty. Usually, you get a lot of people on, you can clearly see like the overall narrative on the market when you got, most of them are basically looking at the same things anyways, the data. But this time they're just all over the place, bouncing from left to right. Don't know if we're bullish, we don't know if we're bearish. People are fading this rally, expecting an '08 type of crash. I do not believe you're going to see that, but I could be wrong, right? I don't know what's going to happen. I can't see into the future. But we shall see. It definitely is struggling to get above or stay above $4,000. $4,000 is a big figure number. It is a very important number. So that seems to be where the sellers are. Even if you were bullish, it looks like you're having trouble staying bullish. So we'll give it some time to see if it can find support, see if it can hold support. If it does, then we'll be looking to take it up another step. But if it is unable to find support, then we will be looking for the breakdown to eventually sell into it at an area of resistance. The price that I wanted to see failure was here. Excuse me, was right there. Last week when we had this close, I was basically telling people that we would watch 40.27 for a potential rejection. We did ultimately get a rejection there, but I mean, can you say it was there? Probably not. Not when it trades that far above. So let's go see what it's doing right now. Probably going to see it bounce because the dollar is very weak right now. So I'd like to see Bitcoin catch a bounce as well here at or around last week's high. I want to see Bitcoin stay above last week's high in order to maintain my bullish bias. Because if we get under last week's high and then start to show weakness under that high, then it's going to look like this was nothing more than a bullish or than a bear market rally. So, I mean, ultimately, when you just have one moving average under price, it's not the best place to look for longs. But we do know that eventually this market is going to find a low. It will find a bottom, and that's where we want to be. Dollar coming into daily support, bouncing. Daily support is just simply yesterday's close. It is the lowest daily closing candle in the downtrend. That is where you're currently bouncing. But like I said, I mean, I missed the speech, so I don't know what she said, and I was preparing to go live. So I don't know if she said anything that was very bearish or hawkish or dovish. I have no clue. There's DXY hourly support. You can see that's got that wick pretty tight there. It's a pretty good bounce. So good morning, everybody. Thank you guys for being here once again. Evening from Bangkok. We did just have the market open. So let me see what the VIX is up to this morning. VIX is up 1.6%. Just having a nasty day yesterday, breaking down below support, creating a new support. So we could probably maybe pick up a few calls here on the VIX. One thing that I definitely want you guys to do is to protect your downside risk. If you're just holding spot, I think you're fine. But for you all that are levered up and holding Bitcoin to the long side, you definitely need to mitigate that risk by at least, if you're long and levered up, you need to get maybe another platform on some other futures exchange and open up a short. It doesn't have to be exactly the same size because that will just offset any gains that you would normally be seeing. But you do want to at least get a piece of it going or something. You got to figure out a way to hedge the downside risk. You can do that easily in the stock market by just buying VIX calls. But like I said yesterday at the end of yesterday's live stream, it does not look to me like anybody's buying the VIX. So we just traded into 2150. What is going on, man? Look at this crazy options chain on the VIX. You got $2.93 on the call side, 75 and 51 cents on the put side. I don't think I've ever seen it that screwed up. This could suggest that there's a lot of demand for calls, not typically on this expiration or on, because you can see the open interest here. There's not a lot going on. Yeah, not a lot going on. So something seems to be weirded out here. I definitely don't want to be a buyer of calls at $2.50 when the puts are trading for 50 cents. I don't want to do that. Bitcoin finding resistance at that level of resistance. It's just an old daily resistance right there. This morning, if you were looking for the short, you should have been watching resistance naturally. Intraday resistance. You can see how this thing is traded sideways at resistance. That's resistance right there, right? And you did get an opportunity to short it at 7 o'clock. So, like, typically that's where you're looking for shorts. And the reason you're looking for shorts, I guess, would be because you're expecting downside continuation from yesterday. You did get it. So if you did take this trade, you need to take profits because you're into an area that could potentially be support. And we don't want it to bounce back and take away any gains you've earned. S&P 500 coming off here. So maybe we could short the euro. Yeah, let's do that. After it just made a bullish engulfing candle. Let's do that. All right, so I can't chase price. Obviously, I need it to come back to daily res. It's an old daily res over here. Let me see where this daily supply is. Oh, it's too low. All right, so in order to manage my risk, I need a retest of daily res. Then I can take a short entry at 1.07127 and throw my risk above the high of day. A reason for that is because the dollar's coming into daily support. This is coming into daily resistance. You still have the VIX climbing, SPX falling, Bitcoin falling. So, yeah, I mean, it's not so much taking I don't know. I mean, the thing is clearly bullish today. It's up big. It's not up big now. But it was down all the way down to there. And then we got the news and you got the spike all the way up there, creating a bullish engulfing on the daily or an outside daily candle. So let's watch 1.06974. I'll throw an alert up here, but it has been absolutely useless for me to throw alerts because for whatever reason, I am not getting the alert sound. And that's the whole point of the alert. I would much rather be a buyer on Bitcoin than a seller on Euro, I think. Because I know where my risk would be mitigated on Bitcoin. Let's just give it a minute here. Because when everything's trading like this, I don't like to take positions simply because you're trading at the high of day. The only thing you can do on Euro is take a short. And that's not the smartest thing to do when it's clearly showing you strength. This is not just a liquidation, right? It's not. If it was just going to be a liquidation, you would simply just get a very small wick above yesterday's high, and then you would want to see a rejection there. That's a liquidation. This is something else entirely. Right? This could be profit taking. But we were looking for a pullback on the euro. And earlier today, you did have it. Right through there. But then you bounced hard. So let's see if we get back up to daily res. If it does, then we can make a decision then. How's that? Into monthly resistance, says Aaron. Let's go look. Yes, sir, it is. That is why. That is why. Thank you, Aaron. You earn a gold star. Month key support. Let's do it like that. That still doesn't look right. What am I doing wrong? Nothing. That's right. Good call, bro. Yeah, outside of a few candles that closed under here, you have an old support right in there. You bounced there and created the monthly res. Good call, man. I appreciate it. The quarterly looks like that. Not quite an engulfing, not quite outside quarter, but I mean, damn it. That looks pretty bullish. Not the trend, just the size of the candle in comparison to the last down candle. That is definitely nice. But the quarter's about to end. I mean, yeah, we will watch daily res. If we get back up to daily res, we can take the short. I mean, is it worth 1% risk? Yeah, I guess so. Because we do expect a slight pullback. This thing has been almost parabolic to the upside. Even though it's very strong today. Right? Here is your first trend. Nice, methodical, slow pullback. And then once you broke out above this swing high, your trend got much more violent to the upside. When trends get parabolic like this, you're typically looking for a potential pullback. So what a lot of traders, especially price action traders, will do is they'll wait for the breakdown, then look for a test of resistance, and then take a short entry. Allow price to show you that it wants to potentially break down. Don't assume it will. We are going to assume it will. So let's see if we get back up to daily res. How many pips is that? Damn, dude, that's 25 pips. That's 25 pips from here to month to daily support or daily res. I don't like that. 21. That means we will have to take a smaller position size. Let's just give it a moment and see what happens. Because it might not just stop at daily res. It might continue. So if we could get it up in here, that would make the risk to reward much better, because then we just need it. So like what I'm trying to say is if I get my entry, say on this line here on this line, and this is my stop, I only need price to come back to here for a 2-to-1. Does that make sense? So the higher I can get it, the better. I just don't like the fact that that your risk markets are not doing anything. Bitcoin, bearish. There's your VIX. It's bullish. S&P 500 is bearish and making fresh daily lows. I don't like that because, like I said, this thing should be bullish. So it does appear that the trade is short euro. But what if euro is actually the leader, not the lagger? And they don't trade in exact one-to-one correlation, but you can watch euro. Some, when the markets are trading the way they usually trade, you can absolutely see some form of a correlation there. You cannot chase price because you have to get your stop above the high of day. You just have to. If you get short all the way down there, well, you won't get short there. There is a 2.1 pip spread, so you'll be short from there. You got to have a 43 pip stop loss. At that point, you would need price to get all the way down to like 106, 200. You would need it to basically retrace the entire move just to make a 2-to-1 risk to reward. That is not what I want you to do. Oh, Bitcoin's taking off here. It's normal because the risk is making lows. New lows. Fresh daily lows. Lagarde should expect to hike at 50 basis point pace for a period of time. Yeah. I think our Fed's going to continue to do the same. They're not going to slow down until inflation gets, under 5 probably. Then they'll probably slow down. But so everything has changed in a sense. Hang on, I got to pull my mat under my feet because standing on a hard floor hurts my back. All right, here we go. Yep, risk is falling off. Bitcoin is getting that lower push. So we need euro to test daily res. So that way we can short it. What do you want, Pep? The door is open, buddy. The dollar is not weak. Euro is strong AF. I would disagree. I would absolutely disagree with that statement because the BOJ is not buying euros. They are selling dollars. Or they did. Anyways, 50 billion of them. So maybe it's just today, right? Maybe just today. I could agree with you, but not overall. The blow off that we seen on the dollar was absolutely from dollar weakness. We know it was because the BOJ We know they were selling the dollar. That's why we got short the dollar. But yeah, the euro is definitely cooking to the upside today. Bitcoin not quite making that fresh low of day just yet. We got to be very careful because the dollar is at support. We know that support can hold. We have seen it before. And this thing making a fresh new daily low. Definitely not trading inversely today. I mean, the other day we had the S&P 500 up, Bitcoin up, the VIX up. The VIX is traded on its own merits. It's its own asset. So a bout of demand coming into the VIX would absolutely allow it to trade higher with the SPX, although it's supposed to be inversely correlated. I would like to get long the VIX. I was talking about that last week, looking for a pullback. The problem is the option chain is jacked up. In fact, I think we have a little bit of contango going on. No, we don't. No, we don't. Yeah, I just, like I said, I don't want to buy the calls on the VIX because the calls are so much more expensive than the puts. If I'm going to buy premium, I want the premiums on both sides of the market to be relatively close to one another. Because if you're buying premium that's so skewed like that, then that means you're going to lose value on the option regardless if you're right on direction or not. Because that slight that skew will ultimately go back to normal. So there just really isn't a whole lot to do. Liquidity flowing to bonds, treasuries. What's up, Brandon? Crypto trades and tech is in the house, y'all. Risk free, 4% is nice in this environment. Yes, sir. For sure. For sure. Tatanka nailed the short. Yeah, I saw that. He damn sure did. He made a little bit of money this morning. Yeah, that's good stuff, man. Good stuff. I'm not, see, I can't. It just goes against my rules. But you know, you guys are free to make your own decisions, and you'll find that sometimes I am on the wrong side of the market, right? So, yeah. Yeah, definitely. You can see the trade today was definitely a short at hourly resistance, intraday resistance. In hindsight, you can see that. But hindsight is a good teacher for future entries. And if you don't buy that statement, use the bar replay tool and go back and look for yourself. I mean, you can see that, especially Bitcoin, cryptocurrencies, they trade sideways AF sometimes. So sideways that the range on Bitcoin, there was a couple times last week where we were only getting like $100 days. Very small range. This range right here is a $200 range. So that's a lot nicer. That's why we like volatility. Volatility is our friend as trend traders. SPX making a fresh daily low. I don't know if we're going to get back up there, but nothing really on fire today. No small cap, penny stock, no big movers happening. Nothing over 29%. That's not the best scanner in the world, though. And I've been doing so much Bitcoin and Forex trading lately, I don't have my scanner anymore. I quit paying for it. The other scanners. Because a lot of times, I mean, they'll pick up certain things, but that this scanner will not pick up. And this is just looking for percent change gainers. So I like to look for ones that are up like, more than 50% on the day. We don't have nothing moving today. So let's look at indices. Everything is red, red, red. Tesla's gotten killed. Tesla's down 50% since September, man. I don't know if it's ever going to find support. Looks like it's finding support today. But it's probably just a bounce. You do have weekly support here, so if it gets back above that and closes back above 160.95, we can watch 160.95 for bullish entries next week. But that's all going to be dependent on how the S&P 500 closes, because right now it looks terrible. Bitcoin making a fresh daily low. Or not quite into the lower support, but you see how we didn't want to take the long up there because there was a good chance that we were going to test this, at least test it. There you go. Right there's your test. Tesla down 50% since September. This is September right here, this swing. Oof. It's down over 60% in the bear market. It's getting beat up for some reason. Are we going to get a daily resistance test or what? Good morning, everybody. Lots of good mornings. Evening from Bangkok, Miss Oh, yeah, that's fantastic. All the way across the ocean. Lagarde should expect to hike at 50 basis points. Things he said that were dovish were mostly about not directly saying he was causing unemployment or a recession, probably on balance less credible than hawkish. Yeah, I got that too. And weekly res, says Michelle on the euro. Yep, right there. There's quite a bit of confluence right here in this area. So we will take a swing at it, I guess, if y'all want to. But we got to get it up there at least. Um CHZ. Yeah. Let's go look at it. This thing was flying earlier on in the year. Or not earlier on in the year. It was actually a few months ago. But it has since pulled back. Yeah. I, I don't know if I'd want to be a buyer of it right now with everything else going on. It's having a nice day today. But in this right here, I would probably be looking to fade this. Any spikes. I definitely would be looking to fade any spike on this. So watch 0.1535. If you continue on whatever this is, a little bit of a short squeeze today or whatever. I mean, it's clearly a bullish engulfing on the daily, but remember, bullish engulfings are not that great of a signal in a downtrend or in a bear market. You typically want to see these happen at support in an uptrend. That's when the signal is like, that's when it's a great signal. So I would probably wait a couple days and just see how far this thing gets. All the way up into 16 cents, I could probably be a fader. So we'll put this one on the watch list. I'm not going to fade it down here. I need it to get up here. Hang on a second. Let me go close that door because the lawn guy is here. We're just going to have to deal with it. Hopefully you guys can't hear it too bad. Touched 151, second expected move and bounce. Currently a mega boner 15-minute candle. Yeah, I know. I saw that. Yeah, we can't short this down here. If it gets up here, we'll have another look at it. But down here, because it could potentially still make the run up to there. Euro's not going to give us that test. Right now, I mean, we would be taking profits on it had it got back up to daily res. Because that's a 2-to-1 risk to reward move right there, just to there. And then what we would do is naturally we would take profits, move our stops to break even. That way, if you get any downside continuation, you will be positioned to hold on to it for, as long as it wants to continue to move lower. And you could use a trailer on it. That's typically what we're trying to do. And being into a monthly resistance like that, like Aaron pointed out and Michelle pointed out, the weekly res is damn near the same price as daily res. So we do have quite a bit of resistance confluence there. But you can't chase price. You got to wait for it to give you that entry. Otherwise, you're destroying your risk to reward and among other things. Yep. Well under support, man. This is starting to look bad again. I liked it above all the major moving averages. I can't stand it under them. All of them. So, yeah, we're probably going to be watching for retests of supply 39.81 or even potentially 39.28 moving forward next week for short entries. Same would be for Bitcoin if that is the case. Even though it has not broken down yet from its uptrend, if risk is getting slammed like that back under everything, you're under the 50 down here, guys. That's bearish, back to being bearish. Quit. That's some kind of new glitch that I've been noticing on TradingView lately. Yeah, this is looking pretty bad. Would you stop? All right. Bitcoin coming down to that level. I do not want to see it get under. That is last week's high. It's very important to me that it stays above that, because under it, I lose any hope of it maintaining this near-term bullish trend. Very near term. But that's like less of a liquidation and more of a sellers just showing back up. $50 retracement of the collapse candle. Sellers just showing up. It wasn't a perfect short. It didn't trade into any level that we could have even looked for shorts at. Yeah. Next daily support is there. But like I said, would you really want to be a buyer of it? Because all the way down there confirms a bull trap. I think Euro's done. I think it's not going to give us our entry. Let's pull up the SPY, see what it looks like. Some bonkers trading happening here the last couple days. Really bonkers. Last week we had a bearish week, and then a couple days this week we were really bullish. Looked like, we were gonna see prices go back up. CPI gapped all the way up to there, and then it filled the gap. So if you were going to see a bounce, I would have expected it to take place there after filling that gap. And you did not. You did not. And right now you're trading under any daily support. That's going to be daily support. Yeah, not looking good. Is there a gap there? Not much. Not much. But it is an old resistance level. So we could potentially watch there. 396.24 for potential short entries next week or tomorrow if you get a pullback to there. But I need to see rejection there. The way we got rejection here. I need to see the same thing. But we could definitely look for short entries up in there. Good morning or good afternoon. Which broker do you short the euro? I use Oanda and Forex.com. Those are the two brokerages I use, exchanges. But I am in the US. So I don't know where you are in the world. Wherever you are in the world, you could you just have to do your own work there. Find out which broker offers the cheapest spreads and then go to them. Forex.com is terrible on their spreads. I was going to close the account a long time ago. I just never got around to doing it because of the spreads. But if you're trading normal pairs like Euro USD, Aussie dollar, USD, JPY, stuff like that, the spreads aren't that bad. But you don't have to trade with a spread account either. You can trade with a fee account where you just get charged for entries and exits. But the whole point of trading Forex is to get away from the fee structure. So yeah, you'll just have to do your own due diligence on that front. I would choose one that you can link to TradingView. That way you can just take trades right off the platform. But a lot of them, like a lot of these they use TradingView on their own platforms for charting. So you could, just like Oanda, if you just log on to the Oanda platform, the actual charting software they use is TradingView. So I mean, I guess there might be some differences. We did wick below last week's wick, but immediately bounced. I don't know what you're talking about, my friend. I don't know what asset you're talking about. Why don't you trade Forex and think or swim? I just never did. Right? I became a Forex trader before I became a stock trader. So I already had what's it called? I already had the account, one of the accounts. So I just, kept it the same. I got Thinkorswim to trade options and to invest in stocks because it's not a simple platform to learn by any stretch of the imagination, but you can't, like anything else, you can learn it. You just have to practice with it, play around with it. But as far as charting goes, it's nowhere near as efficient or as effective, in my opinion, as TradingView is. So even though I have Thinkorswim, a lot of times I just do all my charting over here and then just execute orders over there. Right? But you can trade Forex on Thinkorswim. I know that. It's just simpler to trade Forex this way. Because there's your order pane right there, and it's so simple, right? There's your stop loss. Make sure you're risking 1%, and it automatically calculates your position size for you. Like that's impeccable. That's so easy. And then you just click that button. Boom. You are in there. You are in. With Thinkorswim, the order pane window is much different. Much different. I have a long time ago placed a couple Forex trades on Thinkorswim, but the simplicity is just so much better over here. So much better. And the Netherlands. Yeah, Johan, we got to figure out how to get you on the Discord, my friend. I do not understand what 4-digit code that you are referring to. Everybody else, once I get the alert that they've signed up for the hedge funds here, all I do is send them an invite link to the Discord and they come right on in. So, I don't know why it's different for you. But if something happens and we cannot get you in there, I will refund your money. For sure. For sure. On N efficiency on the DXY at 104,483. 104,483. I don't know what time frame you're looking at for that N efficiency. But yeah, I don't see it. I don't know what time frame you're looking at. I'm having trouble with the London Open, thinking it's the higher low of day, and then it reverses immediately. I don't understand why you would be having trouble with it. If it is going to be the higher low of day, it should reverse. But you got to make sure that you're not taking it too early. Like typically that occurs at 2 or 3 a.m. for me. So what I do is I just watch price. If I'm going to be up at that time, just watch price. And you typically don't want to just do that at some random location on the chart. You want to combine that with the strategy, like a daily resistance, for instance. Like if you're looking for shorts, if you're looking for the London session to put in the high of day, You don't just expect it to throw in the high of the day because you think it's going to. You got to have some kind of reason to assume that it's going to, right? If you're in a random area, like how Bitcoin turned around up here at a random area, I wouldn't have taken that short, even if it did happen at 2 o'clock in the morning, because there is nothing up there for me to take the trade off of. No price level, no objective level to watch, no nothing. So make sure that when you are looking to trade the London Open that way, by expecting a reversal or for it to be the lower high of day, make sure that you're combining that with a form of support or resistance or supply and demand as well. Something. But it's not as easy as I make it sound. Naturally, everything has caveats, and there's difficulties to it. But like, for instance, and also another thing, it just doesn't always work, right? Could it work 8 times in a row and then stop working? Yes. Could it not work 8 times in a row and start working? Yes. Yeah, it's completely random. It's a coin flip. All I'm telling you is if you go back in your chart and look, you will find that more cases than not. So the probabilities are greater than 50% of the time that the London session does indeed make the lower high of day. But here, it did not. There's your 2 o'clock candle. So if you would have been waiting for this candle to close and then you bought it, you got stopped out on the 3 o'clock candle. And the same goes for the 3 o'clock candle. If you wait on the 3 o'clock candle to close and then bought it, you got stopped out, because this was one time that the London session did not call the higher low of day. But you just have to back test it. Here's right here. Nope. This time it did call the low. It called the low. So here's your 1500. We want 1700 right there. So here's your open of the day, right? Open of the day right there. You trade in the London session, the Asian session. These 3 candles are your Asian session. Then you have a period of time where there's really nothing. 2200 hours. This now becomes the new low of day. Here. There's your low of day right there. Here's your open. There's your high of day. Current daily range is right there. So if you just go to, what time is this? Midnight. Here's 1. You set a new high of day here on this candle. Took out the high of day. Then you made a fresh daily high and instantly rolled over. That's 2 o'clock right there. Watch what happens on your 3 o'clock candle. Boom. 3 o'clock sets the low of day. And guess what? You wouldn't have been able to even take this trade because it closed way up there. So you would have been looking for the liquidation break. But on a normal day, nah, I wouldn't be. But this candle right here at 3 o'clock, that is your London session, sets the low of day, and in the same hour makes a fresh daily high. Now, with that being said, this current daily range is very narrow. Very, very narrow. So that's one candle takes out the low and the high of day at the London session. And then you get your upside move. You come into New York, come down into support. Now it looks like support is trying to hold, but it does still holding. And this is at what time? 9 o'clock in the morning. This is the support I was referring to here. One could argue that the open of the day was holding as support as well. And then there's your expansion on through the high of day. That's, you're taking profits at resistance always. So if you would have bought here, you're taking profits there. And then the very next thing, boom. Yeah, it doesn't always work, and it will take you a little while to get a feel for it. It's not going to be something that you can just randomly buy or sell at, you got to back test it. You got to see it. But this damn thing, man, we were waiting for a test of resistance, and it just did not give it to us. And that would have been a fabulous trade this morning. A fabulous trade. But like I said, I don't know what time I've said in the past, I don't know what time the London session is for you. You just have to figure that out. But you can go back in time and see it happen over and over and over again. This time the London session didn't make the low or high of day. It did not. Right? Did not. And this time did not either make the lower high of day. This time it did make the high of day. And once again, it did a liquidity break. You made a fresh daily high and reversed. So you would have been looking to short it at the high. Just mark out the high and mark out the current low and wait for a wick above, I guess. Back test it. The good thing about the bar replay tool is you can back test it and work out your entry, right? I want to take an entry here, for instance, and I'll be aiming for the low day for my profit target, and then write it all down. What's the date, what time, everything that you took the trade, but don't actually take a real trade with real money. You're just going back in time, back testing, collecting data, and you're going to do that over a period of, get a sample set. At least a decent size sample, 50 trades, for instance. It'd take you a week and a half probably to do it. But do 50 trades, fake trades, London opens, higher low of days, and see if it's profitable. Don't just take someone's word for it. I'm trying to teach you guys how to trade, but you still have to do your own due diligence and verify at least some of the stuff I'm talking about is even true. That's the problem with YouTube. Everybody takes what everybody says for their word, and they completely forget about the stat that if 90% of people fail at trading, then that means 90% of the YouTube channels are failing traders. That's the stat. That's the way probabilities work. 90% of crypto Twitter is failing traders. 90%. All right. So it's 70% now. 76%, I think, is what IG says. 76% of their client base fails at trading. They lose money consistently. So even if you do that, the odds are still bad. 76% of every single YouTuber, financial YouTuber, fails. They are lying to you. 76% of them. 76% of Twitter, crypto Twitter, financial Twitter are failing traders. They are lying to you. You have to figure out who is and who isn't. You do that by back testing what they say. And then if you see success in that, boom, shakalaka, you're on to something. You know what I'm saying? You guys, you just got to do your own due diligence. It's your money that's going to be lost. Those guys and gals that are not winning traders, they're not making money off of trading. They're making money off of affiliate links and you. %76 of them. That's why I take crypto Twitter with a grain of salt. I really do, because I don't know if the person that I'm talking to or that's, bad mouthing me or whatever is even a profitable trader. And I definitely don't want to waste my breath arguing with someone who's not even profitable. Just make sure you back test it. This tool is phenomenal for that. It's like, in my opinion, if you got to pay $15 a month just for this tool, it's worth the $15 a month. It was worth the pay for the platform for me just to get rid of the damn pop-up ads. Because if you got the free version of TradingView, I don't remember if it's over here or over here, and then sometimes in the middle you would just get some random ad pop up, boink. And sometimes I see that happen on people's YouTube channels. You know what I'm saying? I'm like, you're a profitable trader, but you don't even pay for freaking TradingView. It's $15 a month. Get rid of the ads, man. Get rid of the ads. But that back testing, that tool up there is phenomenal. It will help you. It helped me even find out the stuff that I'm trying to teach you. That's how I did it. Remember, I was a losing, failing trader for years. So I basically just started figuring out how to get an edge in the market. There's definitely an edge. I can see it. It plays out over and over and over again. I just got to figure out how to make it plausible, how to make it simple enough to where I can do it on a daily basis. So, there you go. That's what we were looking for. We just did not get it. Unfortunately, we can't chase price, okay? You just can't. It screws up your risk to reward. It does everything like that. But that's what we wanted. We wanted a test of 1.07165. We were going to throw our shorts above the high of day, or our stops, above the high of day. Take a short trade, get a 2-to-1 out of it, move the stop to break even, and then we would have been done on the day. We just didn't get the entry. And that happens. Sometimes you just do not get the entry. That's trading. But we don't ever have to chase price. And we definitely don't have to be mad because we missed the trade. Because we will get another chance tomorrow. As long as everything goes well. As long as I wake up, we will get another chance. You don't have to chase price. You do not have to worry about missing opportunities because there are literally thousands of opportunities inside the marketplace every single day. Finding them is not so easy, but we had a beautiful one today. It just didn't work out for us. We didn't get our entry. And I can't just short into it when it's doing this because it had already liquidated the high of day. So it wasn't a liquidation break trade. It was looking for a short bounce off of monthly support, weekly support, daily support. There's daily and weekly. This is your monthly. The price just traded up to there, but that's all it did. All it did was liquidate everybody that had already been short today. And then also pulled in some breakout traders long, because there are breakout traders. They do exist. I don't know why they exist, but they exist. Right there. Up, there's a breakout. Get long, stop. I don't know where they put their stops, but you can see those people are now underwater. That's why you don't buy breakouts or sell breakdowns. Because a lot of times the market reverses in your face. Day trading is the most difficult aspect of trading, because you're looking at a lot more noise, but there is nuance inside of it, and there is an edge inside of a daily range for sure. You just got to learn what you're looking for. Like everybody was saying in the chat, Film Garden and everybody else saying that somebody nailed the short on Bitcoin. They're in the Discord. That's where how they know that he nailed the short, because he posted it in the Discord. Just there we go. But it's the same thing I teach every single day. Same thing. There's your intraday resistance. Here is your intraday support. This is your operating range. This is where you are looking for entries. You're either a seller here or a buyer there. Always. Always, always. So he obviously became a seller here. Boom. And he was on the right side of the market. But even if he wasn't on the right side of the market and the market would have found support here, this is where you're taking profits. Entry, exit, stop to break even, just in case it goes back up. Because we cannot see into the future. We cannot. It's impossible. So we don't never know if we're going to get that breakdown, or when we're long, if we're actually going to get the breakout. But that's, we're not looking for that to happen. We're looking for the high probable scenario. And until you get a candle body closure outside of your operating range, this is where you're looking for entries. There is a candle close under your operating range. So all you would do in this scenario is move this to there, right? Then this becomes your support you aim for if you're short. And I mean, there's a pretty good signal here that suggests you're going to be looking for shorts, because we broke down yesterday, set in support here, then broke down again, then set in a resistance lower than this resistance. So the market is literally showing you what it's doing, right? It's literally showing you that it is breaking down below supports and it is setting lower high resistances. So you are technically making lower highs and lower lows. Therefore, you're looking for short entries. The reason that I didn't take the short is because as long as you're above the 21, I'm technically looking for bullish entries. But with this new data that we have currently on the S&P 500, I'm probably going to be looking for shorts moving on. Unfortunately, I know people really hate it when I get bearish on Bitcoin, but yeah, 17,804. You get a retest of that, I'll probably be looking to enter a short there. And that is just until the S&P 500 chops back to the upside, if it does. I don't know that it will, but this is very choppy price action. Very choppy. You break out, then you break down, then you take out the high, then you break down below the low. You're essentially creating a wedge formation here. Very tight trading. Here's your operating range on a daily basis. So if you're not day trading, if you're looking for swing trades, you still get operating ranges. They're just usually much broader and they take way more time. But this would have been your operating range. You're only looking to be a buyer here or a seller there, whether you're a shorter or a longer. You're always going to be a buyer here and a seller there. You buy low, sell high, or sell high, then buy back low. That's how you make money on a short. But you can clearly see there's a breakdown there. Then here's a breakout here, and then just right back down. But it did hold support, right? This is still the operating range until you get a candle close under. And then you just move your line over. It reverts to being support. Test the support, and boom, gone. Breakout. We're bullish now. No, back down. This is Chop City. Chop City. So when the market's doing that, it's damn near impossible for you to get continuation, right? Because even if you nailed this long, which it was a beautiful, beautiful trade, absolutely perfect. Look at this. You traded right down into your 21 exponential moving average. You're looking for longs at support as long as the moving average is trending under price. Beautiful entry here. When could you have taken it? Anytime you got back above the level. If we close that down on this, and then you can go intraday, get rid of this, because we don't want to, right? This is the level you're looking for those longs. But you gotta wait. Gotta wait until you see a clear and obvious support. And then sometimes you're still going to get stopped out. Sometimes you're still going to get stopped out because, I mean, taking this here, getting long here, or here even, throwing your stop under the wick of the bearish candle, that's a good setup. That's a good entry, good setup. Hopefully you took profit into resistance up in here. Because if you didn't, done. But now you're waiting, watching. This happened at 10 o'clock in the morning. Boom. So there's probably where you're taking your entry stop. You don't have to put the stop under the bullish candle. You want to put the stop under the bearish candle most of the time. I guess if the bullish candle does make a lower low, you could put it under it. It doesn't really matter. Just get your stop under there somewhere. And then you get stopped out. Very next candle. And then the move happens. So even though you have a very strong foundational system and strategy, you're still going to get destroyed on occasion because of a term I call random market violence. It really likes to punish you. The market loves to punish people. It likes to hurt them. It's still not going to be easy. You're still going to take losses. You're still going to struggle. You'll get it over time, though. The more you do it, the more, I guess, experience you will have. Remember, there are certain times that we look for entries and certain times we don't. We don't typically look for entries after 11 o'clock. 10 is usually my cutoff. But sometimes the entries do come in late, which we didn't get an entry here, but we were pushing real close to 10 o'clock. But anything after that, I'm done, because you get a lot more random market violence during those like off hours, if you will, in between sessions. But we just missed our entry. It just didn't give us one. We wanted it to pull back up in the daily res so we could take the short trade. That's how it works. That's why you got to manage your risk. That's why you have to use stop losses. That's why you can't risk more than a couple percent, because I'm telling you, you're going to lose a lot of money, especially when you're trying to learn, because everything looks like a setup to a rookie trader. I mean, every single candle looks like a setup, and it literally isn't. Literally is not. It is not how it works. But even now, you guys saw me get stopped out the other day. It happens to me even now, because I cannot see into the future. But I keep doing what I do, and I know over time, consistency brings profitability. You must reach that consistency. And the only way to do that is to have the same type of entries and the same type of exits and everything. But yeah, that pretty much covers it. If the S&P, like I said, we're going to go back over here and look at the S&P real quick, because the internet is starting to struggle. As long as we're closing under the 21 on the daily closing basis, because at this point, the 21 is under all the other moving averages, or will be. Let's see what happens here. But that's typically not a good sign. The internet is struggling so hard it can't even pull up moving averages. All right, so all the major moving averages, I just mean 21, 50, 100, 200, or something close to those. You could use whatever. You don't have to use a 21. You can use a 20 or a 19 or a 24 or a 23. It don't really matter. The concept is it just gives you a guide. If the market's going to be choppy, then no moving average in the world will help you. None. So you just got to be patient, and you got to understand that no strategy works with 100% efficacy. You have to learn how to be a good loser. As long as we're trading under all the major moving averages with the 21 above daily closes, and this daily close is a midpoint of the 21. Do you see that? This is a legit breakdown. We had a legit breakdown last week, but with this week's volatility, it just made it very difficult. We still made money on the week, but it just wasn't easy. But moving forward, we're probably going to be looking to short resistances. 38.94, you got one there. $4,000 is a big figure number, but that's what we're going to be watching moving forward until we get dailies or at least a weekly close back above this thing to show us that this near-term uptrend wants to continue. You could find support where you are right now. This is an old weekly resistance. You did bounce from here once before. I don't know if you will, but you could. But like, as long as you're under the daily 21, which is around $4,000, then I would be looking for short entries. 39.92 is a good spot to watch for retests and then lower prices. So since that's going to be what we're looking for on the S&P 500, I mean, if you look at it, the market just looks like it's rolling over, right? It took a long time to do it, but it definitely looks like it's rolling over. And you have lost your uptrend. This candle tried to get back above the uptrend. It just couldn't. So that screams weakness. That screams weakness. When you break down, try to get back above it and can't, and then you see downside continuation, that means there's a lot more supply up here than there is demand. So we'll have to watch for these supply areas for short entries. And if that's the case on this, it's more than likely going to be the case on Bitcoin. We're not looking for fresh lows, but we will, every day trading opportunity that we take from this point, we'll be looking for short entries into resistance. That's the key right there. Has to be at an objective resistance level. Then you can get short and look for continuation. Let me answer a couple of these questions, and then we will take it already on Discord. Thanks. Awesome. Sweet. Your last link did work. Sweet. Awesome. Good. I ought to spend time to really learn. I don't actually day trade myself, but I know Heath is a dude to learn from. Don't mean to stroke his ego. Nah, you're all right. I appreciate it. It's a compliment. I don't take it as ego stroking. I take it as a compliment. Take it for what it is, right? I appreciate compliments. It's nice to hear. The world would be so much better off if everybody was nice to each other instead of being evil and highly opinionated. Yeah, I can teach you what to look for if you want to be a trader. And you can apply these principles. You don't have to apply them to day trading alone. I am a price action analyst. So essentially all I'm doing is, as a day trader, I'm applying the same concept that I use for looking for weekly and monthly entries as well. Remember, you can take you can do this on a weekly basis if you are a swing trader, or a monthly basis. We know because of data that, the monthly ranges are usually, the higher low is usually set by the first week. So in the first week of every new month, you're looking for either a high of that month or the low of that month, and that you're looking for entries there. You pair that with what you already know or what you're learning now, because I don't know what you know, but you pair that with information that you're learning here, right? Monthly res is right there. Right there. Right there. Now we're 15 days into this monthly range, so the monthly high didn't get set until a couple days ago. So if you have massive high risk event or high event risk on the docket for that month, i.e. CPI, FOMC, and all that, then you might not want to be looking for the higher low of the month at the beginning of the month. You'll probably see the higher low of the month set during FOMC, like it was here. So there's monthly res. Drop down to your daily time frame. Guess what? The high of the month was set right there 2 days ago during, once again, CPI. Almost every CPI print we've gotten has ended up with a bearish move. This is a CPI day. So the first move was bullish, but it traded up to monthly resistance. That's your entry, and that's it. You're short. Your stop's up here somewhere. Then you close down your computer and you don't look and see what happens for a month. See where this thing ends up at the monthly close. What you would love to see is a big, strong red candle, right? But it doesn't mean you will get that. The way you could take profits is, here is your last month's open. There is a good probability that you will see a bounce there, or a possibility that you will see a bounce there. Entry, take profits, move stop to break even. Then if you get more monthly expansion, you've just literally taken one trade, one entry. You've taken one exit, and now you are risk-free outside of unrealized P&L. That's always going to be risked using this strategy. It's just, there's no way around it. And then see if you get downside continuation. That's technically what we should have been doing. But sometimes, because I am a day trader, because I don't have really much else to do, sometimes I forget to look for these freaking levels, these monthly and quarterly levels. If I would have known that was there, I definitely would have been taking a short trade. Absolutely. It's a little bit more difficult on Bitcoin because Bitcoin just has a big candle. You know what I mean? Big turd candle last month. There. So like nailing the high of the month on Bitcoin was tough. You did it in the middle of nowhere. There's no resistance, no opens, no closes. Hell, there's not even a wick there. It just literally rolled over at a random spot on the chart. But these are your operating areas on the monthly, right? There, boom, boom. Until you get a candle body closure under, you're a buyer here or a seller there. You can use this strategy to be a swing trader. You can do it on quarterly charts. Every quarter, I'm looking for the quarter high or the quarter low. Every month, I do the same thing. Every week, every day. But if you can nail the higher time frame ones, you know what I'm saying? If you can nail the higher time frame ones, then you can get into something like this, right? You see how that works? Like, you just barely threw a wick through that, and now you're back above it. Short entry up there. This is a 3-month chart. These are quarterly candles. This quarterly candle is ending in 15 days, but we have a yearly candle opening coming up. A yearly open. And naturally, we're going to be trying to position ourselves for a yearly range. Yearly trades are fanatical. They're crazy. They're insane. You get in them and you don't touch them for a solid year. Which, I may not have to touch this trade. As long as we're not closing back above this, I'm good. I don't have to touch it. As it may pull back all the way up to there, then roll back over. We don't know what's going to happen in the future, but we know what we're looking for. And that's the goal, just to understand what it is you're looking for. I am one of the best candlestick analysts out there. And, any questions you got, you can hit me up. I will answer them. I am not hiding anything from anybody. My goal is to teach you guys something that you can do yourself, that you do not need me for. I did not do this for a business. If it was, that's a terrible business idea, isn't it? Give everybody your secrets. No, you keep them wanting more. You keep them coming back for more. I didn't do it for that. I did it to show you what to look for, the right things to look for. Understand that all you're trying to do is get in here, get out there. If you're a short, if you're long, you're just trying to get in here, get out here, right? That's it. That's what you're trying to do on a consistent basis. And I can teach you how to get there, or at least show you ways that I do it. On the S&P 500 2-week chart, you got a bearish engulfing for now. We got 1 day and 6 hours left on this close. That's not good. That looks bad. Here's a 2-week engulfing. What happened? Continuation. There's a 2-week engulfing. You've even got another continuation candle out of that. You are in a downtrend. There's confluence, monthly res, and trend line. Ooh, look at that. See how that does that? It's so weird. On the monthly chart, you've broken out, but you clearly have not. On the 2-week, look at this candle. You're above the trend line, but over here, you never even got close to it. That's so, I don't know why that happens, but you had confluence there. We should have shorted it up there. Next time we will. Gotta run. Yeah, I gotta run too. I'm starving. Bitcoin short 18,262 already took profits, left some on, stop loss at break even. Trust these people. This is the way. Thank you, my friend. Learn to be a good loser. I'll add to learn to be a good small loser. Small losses, big wins. Exactly. Yes, that's the goal. Lose small, win bigger. Lose small. You're just looking for base hits. You're not trying to get rich overnight. You're not trying to get rich on a single trade. You're just literally looking to stack gains. One after another, preferably. But it doesn't always happen like that. There are tough weeks, tough months, tough years for some traders. I've not having a tough year for a long time, but I try not to close out the week red. I don't like closing out the week red, but it happens. You got to be picky, stingy about your entries. Very stingy. You are on log. Yeah, that could have something to do with it. The trend lines are messed up because you're on log. Got you. Thanks, Brandon. All right, you guys. You all have a fantastic rest of your day. Make sure you guys have a fantastic weekend. We got one more trading day, so we'll see what we can do tomorrow. But I don't know if there's going to be a lot to do. You're literally watching this thing break down right now in front of your face. So it's not what I wanted to see. I kind of wanted to see a breakout. We're not getting it. So we'll take the obvious scenario and we'll look for shorts at resistance moving forward. This could be terrible news for the S&P 500 because that is a bearish signal. You know what I mean? Just like bullish engulfings are great signals for uptrends off of support. Well, bearish engulfings are great signals and downtrends off of resistance. Yeah. Yeah. We're probably going to be looking for shorts. Yes, sir. And that's probably going to be a good place for it. Right there. 2-week resistance. We'll see if we get a test of that. We'll see if it ends up working out. Thank you guys so much for being here. Thank you always for all your support. I really appreciate it. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.